before we get started? Yes, great. Okay, thanks a lot for that feedback. Welcome to our webinar. It's the first time I'm doing a webinar on a Monday, so thanks for participating. Today we're talking about, the topic is timing the market using Vectorbased 7. And again, I've got Dr. David Paul in the studio with us, and he'll be taking us through the program, how to use it more effectively. And I know a lot of our clients are using Vectorbased very, very successfully and making money on the markets. So I'm going to hand over to Dr. Paul now. Thank you.
Sean, thank you very much. Thank you for having me. Ladies and gentlemen, welcome to our webcast. I promise I won't keep you too long. I know quite a few people in the South African market. I've been active in the South African market since 1982. I started off trading technically, over the last few years I've managed for the first time to combine technical analysis with fundamental analysis of the market. The product that I have introduced to South Africa for the last 4 years now is called Vectorbased, and the Vectorbased edge in markets, ladies and gentlemen, is that we take the fundamental position of a share and we integrate that with the technical position of a share, and we integrate both those with the technical position of the overall market. And when all three are saying yes, you can simply make better decisions that result in a higher hit rate, and decisions that result in making more money when you're right than when you lose when you're wrong, which traders call the risk to reward ratio. Now, there's three things that affect the amount of money that you make in the trading environment. One is the number of times out of 10 that you get it right, the hit rate. 2 is the risk to reward, and 3 are commissions and spreads. There's an American psychologist called Van Thorpe who coined the word expectancy. And the first thing that we need in the trading environment is that we need some form of edge that makes a heap more money when it's right than it loses when it's wrong. And that's not simply about hit rate. It's about this mixture of hit rate and risk to reward ratio. And frequently, some of the highest hit rate systems don't make any money at all. For example, there's a fellow in Pretoria who flogs a Forex course. And he says he's right 90% of the time. But in his own literature, he says that when he's right, he makes 10 ticks. And when he's wrong, he loses 90 ticks. Which means if you do the sums, that 9 times 10 is 90, and 1 times 90 is also 90. So in fact, it means that the system doesn't make any money at all. So the Vectorbased edge is there to try and put the three facets of the stock market together to push up the overall expectancy of your trading experience. So let me show you how we do that. I have a little bit of a PowerPoint presentation, which I'll start with, and then we'll move very quickly to what the presentation is really about today, which is timing the market using Vectorbased and trying to see how Vectorbased would have helped us make some sense of the turbulent environment over the last 2 or 3 months. It's been fun if you were on the right side of it. Let's put it like that. I think you all know how to put in questions, folks. I'm going to do my best to try and answer all your questions, and I'll give you my email address towards the end. Sean's also got my email address, so anything that comes to mind after the presentation, then I'll do my best to, in fact, answer those. I'm speaking tonight in Pretoria and Irene. I'm speaking tomorrow night in Johannesburg, speaking on Wednesday night in Durban, and I'm speaking on Thursday night in Cape Town. So any of you that are in those places and want to come along, you're more than welcome, and I'll certainly give you, if you email me, I'll give you the details. So timing market using Vectorbased. So what we're going to try and do is to try and identify market trends. Now, ladies and gentlemen, one trend before you can identify the trend, you have to identify the time frame. So trends are like Russian dolls. There are short-term trends within longer-term trends, and we do our best in Vectorbased to identify the short-term trend of the market, which we call the primary wave, and the longer-term trend of the market, which we call the underlying trend. And I'm going to try and get across how we do that unemotionally, robustly, without any curve fitting or relabeling, or repainting as it's called in the industry. I'm going to try and talk about how to identify overbought and oversold markets, although I tread very lightly on those words because they are two very dangerous words. And Livermore, in reminiscence of a stock operator nearly 100 years ago, wrote, "I've never seen a share too high not to go higher and too low not to go lower." So two very dangerous words, but we'll talk about them. And then we'll talk about a simple 5-minute presentation. So at Vectorbased, we talk about when to buy, and that's what today's presentation is pretty much going to be all about. We also look at what to buy and when to sell, and that's what I'm going to try and get across today. So the founder of Vectorbased, this gentleman by the name of Bart DeLido, he put this program together 26 years ago, and he says so beautifully that the single most important thing to know is whether the market is going up or down. Everything follows from that. The mantra is that we want to be buying rising stocks and rising markets. And maybe to expand on that a little bit further, we want to try and find undervalued stocks that are aggressively growing their earnings safely, that are going up, and we want to buy those shares into a general market that's going up. Now, the other side of that, of course, is sell falling stocks and falling markets. So if you've proceeded in your trading to the point where you're happy to sell something you haven't got, then by all means, you can short the market. It is another step, and your timing, I think, Sean, you would agree, needs to be better on the short side. And the big fella is nodding his head, and he's also saying that you need to have fairly big ones. Would I be correct? Is that what your hand signal sent across there? Yes, he was holding cannonballs in his hand as he gesticulated from across the room. So I'm going to go into the PowerPoint to the program itself, folks. Here we go. And there's the front page of Vectorbased South Africa. The internet problems seem to follow me around, but folks, the front page of Vectorbased South Africa looks exactly the same as Vectorbased US, and with the Vectorbased South African subscription, you get the American subscription chucked in for free. We're currently tracking 357 stocks in the South African database. I'm currently tracking 8,000 stocks in the US database. If you want the UK database, then that's available. The Australian one's available, the Canadian one's available, the Indian one's available. There's a couple of other. The whole of Europe is available as well if you wish. First thing that we can see, ladies and gentlemen, is that in the 357 stocks that we're tracking, there's 119 of them rising and 62 of them selling. And before I can describe any of that, I just need to go into some of the stocks and do a quick review. So if I click on Viewers, and I go to Stock Viewer, this fellow, there we go. It's pulling in the data for the stocks in the South African marketplace. The internet, here we go. Big sigh of relief. I'm looking at the top 50, folks, and the reason I'm looking at the top 50, not the whole market, is that I want to take the grunt off the internet. I find the trading relatively easy compared to making the internet work. Right at the top of the list, there's Aspen. Capitec next, Steinhoff next. Now these are listed in a interesting order. First of all, if we look at Capitec, share that I'm happy to say I'm holding, it's trading at 290, 291. The last time I looked this morning, it wasn't far off that. This is Friday's close, folks. Now, the first proprietary number in Vectorbased is the value. Now, Vectorbased looks at the last 5 years, and it looks at the cold, hard numbers in the balance sheet, income statement, cash flow statement, sales, and it puts a value to every share in the database. And we can see at a glance whether our share is undervalued or overvalued. And we can see that at 290, the share is a tad undervalued. As a default, we favor undervalued stocks. That's the first proprietary Vectorbased number. So this value is the value of the share we believe today. And up 5 Rand 15 on Friday. Now, a really important number is relative value. And relative value is a measure of the earnings potential of the share over the next 3 years. Now, you're going to have to concentrate for about 30 seconds. Here's how we work it out. We project the earnings of every share in the market for the next 3 years. And we assume that those earnings will be fully discounted into the price at some time over the next 3 years. We work out what the price will be, we calculate the upside, and we divide that upside by what a short-dated South African bond will pay over the next 3 years. And the resultant is relative value. At 1.15 on Capitec, the relative value number is saying that we expect Capitec to outperform a South African bond by 15% over the next 3 years, which is good. It's not excellent, but it's good. And as the share price has risen recently, that number has come down. The next proprietary number is relative safety, which is a measure of risk. And largely it says, are these numbers getting better? Are these numbers getting worse? Now, if you're a conservative investor and you don't want surprises, then you would look for shares with relatively high relative safety. If you're an investor or trader that can manage risk proactively with stop-loss orders, then you don't have to worry too much about relative safety. For example, down here, Torre, okay, it's got a relative value and earnings potential over the next 3 years, which should outperform a government bond by 56%, which is excellent. In fact, it's compelling. But the relative safety is 1.02. There's more probability of a surprise there. If you're prepared to manage risk proactively, then that's just fine. The third proprietary number is relative timing, and that simply measures the trend. It mathematically massages the trend between 0 and 2. Above 1, it's going up. Below 1, it's falling. Further above 1, the faster it's going up. So it measures both the direction of the trend and the strength of the trend. And then what old Bart DeLillo did next was he put all of these 3 numbers together into the master indicator called VST. And all of the shares on the JSE and on every other Vectorbased database are listed by descending VST, the best combinations of value, safety, and trend. Now, the reason I'm actually going into this in the market timing exercise is that every evening we work out whether the share is on a buy recommendation, a hold recommendation, or if we were to go down far enough here, on a sell recommendation. I don't know whether we'll find any in the top 50. No, we don't. But if we were to go through all of the shares in the market, I assure you that if we were to look at some gold mines, we would find a few sell recommendations. So now, as you can see, most of the top 50 are on buy recommendations. We're not saying for a second that you go out and buy all of those. It's a buy recommendation. And its biggest purpose, ladies and gentlemen, is not to time the market, but to work out the breadth of the market. And as we're going to see in a few minutes, Vectorbased looks at the breadth of the market as a big component of its market timing model. We put a stop loss on every share every single evening. Now, the stop loss is quite unique in that it's adjusted for both volatility. Some shares are naturally noisier than others, and it's also adjusted for the fundamentals. So if the fundamentals are really good, we widen the stop loss. We give the share more wiggle room, and the objective is to find an undervalued share that's aggressively growing its earnings safely, that's going up, and to stay well out of the way and just let the darn thing go up. And there's a very fine balance between giving the share enough room, a good share, enough room to move up the page, and protecting your capital. And that's what the Vectorbased stop loss is all about, trying to find that magic place that succeeds in allowing good shares just to go up the page without you getting kicked out in a few bad days, and protecting your capital. Now, these numbers to the right-hand side, ladies and gentlemen, are our best shot at the future. And these are the numbers that are taken to work out value, and relative safety. So when you go to the Financial Times or the Business Day and you have a look at the earnings yield of Aspen, for example, it's going to be quite different to the one on Vectorbased. The one on Vectorbased is it's our best shot at the future, and as Mark Twain so beautifully said, the future is a very slippery commodity. It's our best shot at that. So we can't sell you historical PEs, for example, because you can go to the Mug and Bean and pick up the Star and get those for free. So those are our best shot at the future. So it's our objective to buy undervalued shares that are aggressively growing their earnings, relative value, safely, relative safety. And as I said, some people will be quite happy to pull the relative safety number right down because they're managing risk proactively, and they prove to themselves that if the share doesn't look right or it starts to fall and pull back, that they will simply press the button and get out. Many people haven't got the emotional response to do that. And many people haven't got the time or the focus to do that. They're gallivanting around the world or playing too much golf. Sounds great. So our objective is to find those types of shares, and we want to buy them when the general market is rising. And our first job now is to try and work out what the general market is doing and how we would have performed over the last, in fact, 3 months. So to do that, I need to explain the Vectorbased timing model. First of all, I will describe it, and then I'll go into the nuts and bolts of how it's in fact calculated. It's not important that you know how it's calculated, but in trading I've always found that if you've got a good feel for how something is in fact put together, then you stand a much better chance of following it. So the first thing that we can see is the little traffic light. And the little traffic light, in fact, measures the short-term trend or the primary wave of the market. And as you can see, the little pointer is in the green, and it's saying that Vectorbased advocates buying safe, undervalued stocks that are rising in price at this time. Now, let's have a look at how this is all made up. To do that, first of all, Vectorbased believes that 70% of the exercise is working out what the general market is doing, as per that quote from Dr. DeLito a few moments ago. If I click on timing, it takes us to a market timing page. And if I click on the market timing graph, it should pull up the overall JSE. With any luck, come on girl. There we go. There we go. Now, I'm going to put on, and I'm going to get rid of this other chart for a moment. So we've just got one chart up there, and it's a candlestick chart, and I'm just going to change that to a line chart so that it's easy to see. All right, there's a line chart. Okay, so and I go back a couple of years, and what I've got, ladies and gentlemen, is the Johannesburg stock market since November 2012, and the one line that I've got on it is a simple 200-day moving average. Okay, that's not a Vectorbased thing, it's just something I've been putting on charts for the better part of 30 years. So this blue thick line is not the overall JSE over, it's not the ALSI 40, it's the Vectorbased composite, which is an equally weighted index of all of the stocks that Vectorbased are following. To get into the Vectorbased database, a share must have a 5-year track record. Without a 5-year audited track record, we can't work out value, we can't work out relative value, and we can't work out relative safety. And remember, the Vectorbased edge is putting together the fundamental position of a company with the technical position of a company, with the technical position of the overall market, which is what I'm trying to explain at the moment. So this is the broadest measure of the JSE that I know. So it means it's an equally weighted index, and at Vectorbased we believe that an equally weighted index measures sentiment much better than an index that's adjusted by market cap. So it means, ladies and gentlemen, that if you go out and start a little shop and you have that little shop listed, you will have the same weighting in the index as Woolies. Okay, so there's a challenge for you. So I'm going to put on another measure now, which is RT. Now, this is the relative timing of the overall Vectorbased composite. A few moments ago I mentioned that we work out the relative timing of each share. Well, this is the relative timing indicator of the Vectorbased composite. And it runs between 0 and 2. Below 1, we're falling. Above 1, we're rising. And we also look at the buy-sell ratio, which is our measure of the breadth of the advance. Every day, Vectorbased works out the number of buys in the South African database and works out the number of sales in the South African database, and it uses that to measure the breadth of the advance. And if I click on that, here we've got the buy-sell ratio. Okay, and what Dr. Toledo then did, and the chaps at Vectorbased did, is that they put both of these together into a composite indicator called the MTI, the market timing indicator. Now, all of the algorithms that calculate value, relative safety, those algorithms are 25, 26 years old. And they're all fully revealed in the coursework of Vectorbased, which comes in a nice little green book by Dr. Toledo. The only one thing that he won't give away is how the market timing indicator is calculated. But what he does is that he's put the RT, or the momentum of the Vectorbased composite, and the breadth of the Vectorbased composite together into the one indicator called the MTI. And I'm going to now get rid of the RT because we don't need it. I'm going to get rid of the buy-sell ratio because we don't need it. And as you can see, there's the MTI. Now, folks, when the MTI gets down below 1, it's saying that the South African market has moved into a downturn. And when the MTI comes up through 1, it's saying that the underlying trend has turned to up. So, as we can see, here, the underlying trend turned down, and then the underlying trend moved back up again. Underlying trend moved up, down, and up, and the last up, folks, happened on St. Valentine's night, the 14th of February, and lasted until a few weeks ago. So when the MTI is below 1, Vectorbased defines the underlying trend to be down. When the MTI comes up through 1, it's saying that the underlying trend is now up, and that's measured by looking at the momentum of the price and the breadth of the price. Okay, now when the MTI goes up through 1 and the composite closes above the highest close of the last 10 days, the underlying trend is confirmed up. And if I click on this little button, it then labels the chart with red and green triangles. And that, ladies and gentlemen, is the most conservative signal in Vectorbased. There's some short-term signals that we'll look at momentarily, but for example, in February here, when the composite went down through 1 and came back up through 1, and then it closed above the highest close of the last 10 days, that's called a confirmed call, and from that the market moved for several months. And we've had some great confirmed calls over the last few years. And as you can see, there was one that lasted from, I'll never forget that one, that was the 5th of June. And it lasted nearly a year. Then we got a little bit of ripple, and we got a little bit of ripple just at Christmas time here, and then we have a nice 6 to 7 month move. So it's not Elliott wave. It's not projecting anything. It's reacting to the market in terms of price, in terms of the momentum of the price, and in terms of the momentum of the breadth of the market. So it's a real measure of the market. There's no form of projection into the future. It's listening to the only master, which is the market itself. Now, I mentioned that we would look at overbought and oversold levels. Now, with the Vectorbased South African model comes the American market for free. And that's there for a very, very good reason, because over the last 26 years, Vectorbased have examined pretty much every turn on the American market, and as you know, the American market turns and our market turns a microsecond later. So on the 15th, for example, we got a confirmed call up here a few days ago. The last confirmed call. We'll see in a moment how we could have got in much, much earlier. But the last confirmed call, which is the most conservative signal in Vectorbased, happened on the 29th. Okay. Now, on the American market, when the MTI gets down below 0.6, 95% of the time you'll get a bounce in the market. And that they've looked at over the last 25 years. So if you were to put exactly the same chart up of the American market, it gives you a really good idea of when the market has a high probability of either bouncing or reversing. Now, the data is not quite as complete in the South African market, and we haven't got nearly as many observations. So down at this turn here, I was watching the American market, and on the 15th of October, now those of you who were in markets for the first 2 weeks of October have got clearly a strong heart, because if you didn't have a strong heart that Monday afternoon and you were long, you would no longer be with us. It was quite an afternoon. Okay, so on the 15th of October, the MTI in the American market got right down to 0.6, And 95% of the time, the research people across there tell me that that predicts a reversal. Okay, so that's something to look at in terms of overbought, oversold levels. I have lots and lots of students who use Vectorbased here, and they say that when they see the MTI going down through 1 and starting to kick up again, that's the time to load up. And as you can see, that would have been a great measure of the market here. So our most conservative signal is called a confirmed call, and it's saying that the most conservative investors should be aboard. Now, Sean and I talked about this a little bit earlier, and it's always the same. The good trade is always the hard trade, and unfortunately, I don't do that much tweeting, but I tweeted this over the weekend that I said that every time you have a good trade, every time you see a good trade, somebody's made a brave decision. Rarely do you get one without the other. Okay, if you want access to these pearls of information, then you can follow me on Trader Davy if you wish. Okay, I don't tweet trade recommendations at all. I'm not licensed to give financial advice. I leave that to the boys at PSG here. So I just tweet the old word of wisdom. So the underlying trend moved up. MTI moves up through 1. That means the underlying trend turns to up. If the market is trading above closes above the highest close of the last 10 days, then that's also a confirmed call. Sometimes the underlying trend will change, and then a few days later you will get the confirmed call depending on the geometry of the market. Okay, now I want to in fact go and blow this all up, folks, and I'm now going to blow this up to a 3-month chart, and I want to have a look at the turn itself. And to change this, I'm going to change this, change the style, change the type. It's a line chart, and I want to change. Why does that not want to come up? I want to dots. And now we can see on a day-by-day basis. Okay. Now, there was the market, and there was the sell-off on the downside. Now, the very first signal that we get on Vectorbased is called the primary wave turning. This doesn't seem right to me. I want style. I've got this wrong. Okay, cancel. I want this. And trying to get not dots, but I'm trying to get just given too many dots here. I'm getting change style, dotted, solid, dashed. No. That's what I want. Okay, it's a line chart, and this in fact looks at the closes on that particular day. Sorry about that, guys. I do this sort of intuitively. The first signal, okay, which is called the primary wave turning up, is when the market in fact closes above the close of the last 5 days, and that is the primary wave turning up. Okay, and as you can see, the MTI goes up through 1 here, and on that day we close above the close of the last 10 days. So the primary wave is simply that the market in fact closes above the last 5 closes. Now, to measure this automatically without you having to look at it, it's all done for you automatically in the front page on the color guard. And I can, in fact, if I go to the Vectorbased views, it gives us a summary of the color guard over the last few weeks. Okay, and I hope you can all see that. Okay, so here's what happened. First of all, Vectorbased define the primary wave and the secondary wave in 2 words. So on the 13th of the 10th, when the market was falling, the first word was down. That's saying that the primary wave is down, and that means that the market is trading below a 5-day low. The secondary, or the underlying trend, is down, and that means that the market is trading below a 10-day low. And as you can see, the MTI is less than 1, and that means also that the underlying trend is down. So right here from the 13th, the 14th, the 15th, and on the 16th, and on the 17th, we go up, down. And that means that the primary wave turned to up. Now, the primary wave turning to up is simply that the market closes above the close of the last 5 days. It's a very aggressive signal. I don't take it myself. I know some people who do. And it's a bit noisy. And that's the most aggressive signal in Vectorbased. Now, then the market then in fact goes down, down again, and that's quite common. The market, as you know, will make a rising bottom. So it went up and then it pulled back, and we go down, down again. And then the next day, the market goes up, down. So the primary wave in fact goes up again, but on this occasion we get these 2 green lights. Now, what are these green lights? The first column is the price of the Vectorbased composite, and the second column is the RT, or the momentum of the Vectorbased composite. And we measure a short-term 5-day rate of change of the price and a 5-day rate of change of the RT. And if those are rising above a threshold level, we color them green. And this means that the primary wave is up, plus the primary wave and the speed of the primary wave are gaining. And that is a really good signal, and it's called a green light buy. And that happened on the 21st of the 10th. And for me, that was my first positive signal that the JSE was turning around. I personally find the primary wave a tad too noisy. This is called a green light buy, and if you go to Vectorbased.com and you do a search on the green light buy, there's literally acres and acres of videos on the green light buy. It's a very aggressive signal, but it's a signal that works exceptionally well. And it's a signal that short-term traders can get into the market literally a week to 10 days before the more conservative traders get in. If you are a spread better or you trade in leverage, then you've no choice but take that type of signal. I find the primary wave turning too noisy for me. And then all of a sudden, we're up, down. The short-term trend is up. Longer-term, our underlying trend is down. Remember, the MTI is less than 1. And then we have 3 yellow days where nothing has changed. And then we get 2 more green days. And this is saying that the price is speeding up in a 5-day rate of change, and the speed of the price. Now, those of you that are engineers, this is all at the seminars, I see the engineers smiling at me when I ask what is the first rate of change of speed, and they all pipe up to a man, acceleration. So the first column, ladies and gentlemen, measures the speed of the price over 5 days. The second column measures the speed of the speed, which is the acceleration of the price. And as we'll see in a second, the third column measures the speed of the buy-sell ratio, the breadth of the market. Now, this is another signal to tell us that the short-term trend is in fact speeding up, and there's another green light buy. We're still in an up-down situation, so the conservative people are probably sitting by the wayside. We get another green light here, and then on the 28th, ladies and gentlemen, we get 3 green lights. It's interesting, when I go to meetings in Vectorbased in North Carolina, when they start a meeting, they don't say, let's start now, guys. They say, okay, guys, we've got 3 green lights. That means the meeting's just about to start. Okay, so 3 green lights. This is a really strong signal. This is saying that the short-term price is speeding up. The price is accelerating, and the breadth of the market is speeding up. This means that there are the number of companies that are rising are speeding up over the number of companies that are falling. So the market is moving up, not just on 1 or 2 issues, but across the board. And then on the 29th, we get another 3 green lights. And then again, last Friday, we got another 3 green lights. So quite honestly, with the green light buy, aggressive traders should have been in on the 21st, the 22nd, the 23rd into this advance. Okay, so at the moment, then on the 28th, the MTI came up through 1. On the 29th, the MTI came up through 1. And on the same day, the price was trading and closed above the close of the last 10 days. So we have the underlying trend changing to up and confirmed on the same day. And now, in the those of you that have listened to any rugby over the years will remember an old Scots commentator called Bull McLaren, and he used to start every rugby game the same way. The ball is in, the game is on. Okay, long since dead. He was the voice of rugby in my youth. I think he commentated with SuperSport out here just 1 year before he died. So the ball is in, the game is on since the 28th, the 29th. I think that if you're a short-term player, that you need to be well in. Now, ladies and gentlemen, at every turn, exactly the same thing happens. First of all, we're in a down-down situation. And then we go up-down. The primary wave turns. And the primary wave turns, not by magic, but the Vectorbased composite closes above the close of the last 5 days. It's a robust signal that's not curve-fitted. Then I find that too noisy. The second signal is that the short-term trend starts to speed up, and that is a green light buy. And that's a really good signal that rarely does not follow through for a couple of days. Even if you're an aggressive trader, if the market moves your way for a couple of days, well, you need to be thinking about getting your stop up to entry and managing the trade. Managing the trade is 90% of being a short-term trader. Then we get another couple of green lights, and then we get 3 green lights, and this is saying that I just want to go. And then all of a sudden, the underlying trend changes. Every turn, ladies and gentlemen, is exactly the same. And you get really, really good at this after you work out. Now, our objective, if you're a short-term trader, then maybe you need to bring some technical analysis skills. But over the last 3 or 4 days, folks, you could have fired a dart at our little dartboard, that our little stock market, and I think that you would have found something that's going up, as long as you are not in gold shares, that is. I met a very cynical young man a few weeks ago, and he told me that to get out of buying gold shares, that you need to simply visualize your money in a large case, and then visualize your money being placed into the cage, and then visualize watching your money go down into the ground. And he says if you keep doing that for long enough, you'll never invest in a gold share ever again. He was very much against mining shares, this fellow. Not for everybody, that's for sure. So every turn is exactly the same. Now, folks, the turn down is exactly the same. So if I go back to this chart and I go back to a 3-month chart, we'll see the top. There is the confirmed call down. And that happened on the 23rd of September. So what I can do here is that I can actually go back on the Vectorbased views and see what would have happened. So that was the 23rd of September. I'll go back now to, let's say, the 3rd of September, and we'll look at what the Vectorbased views was doing. And guys, I assure you that the thing doesn't repaint, it doesn't change after the fact, and we offer a 60-day trial of the product so that you can prove that for yourself. And the product is then on a month-by-month basis. There's no contracts, so there's no point in me bullshitting you. Okay, so if I go back here, and we can see that we were in a, as we were going up the page quite strongly. Did I get this right now? There's the 3rd. Okay, and then all of a sudden we had mixed signals here. We had a down up, 2 red days, and here on the 23rd we had the confirmed down, and then we have red signals right after that. And the red signal means, folks, that the short-term trend is falling, and it's speeding up. Here, the number of cells in the database is growing over the number of buys. So if you want to short the market, these red light cells make really good places to sell the market. But one caveat is that on the short side, your timing needs to be better. So let's just summarize the sell. All of a sudden, what happens is that the market is rising, and we are in an up-up situation. Then all of a sudden, the primary wave will turn to down, and turns to down because the market is now trading and closes below the last 5 days closes. So the primary wave turns to down, and then all of a sudden we get red lights. And we had 2 red lights here. And then, of course, the market jumps up again. And in fact takes us out of that position. So you'd have been, if you were short there, you'd have been stopped out. Simple as that. Okay, simple as that. That would have been a bad trade. That happened around the Scots vote. Do you remember the Scots vote? All of a sudden, the market opened after the Scots vote, went up for 2 days, stopped out all the shorts. You've got to be better on the short side of the market. Ask anybody. Then all of a sudden, we go down up again, and we get a red light. Now, that was a shorting signal right there on the 22nd, and that one worked beautifully. So if you'd shorted there, you'd have been stopped out. Unfortunately, that goes with the territory. And then we go confirm down because the MTI goes less than 1, and then we fall the whole way into the 15th. So the product can be used if you've got the stomach to sell shares with poor fundamentals that are falling into a market that's falling, then Vectorbased will do that for you. I think, ladies and gentlemen, until you're making money consistently on the long side of the market, then if you see Vectorbased going confirmed down, if you can just get into cash, then you will be well ahead of the curve. I know many of you short the market. That's great. For some reason, I personally do not short shares that much, although I do short the index quite a bit, but I don't short shares themselves. I don't know why. I have no idea why. Okay, so I'm very happy that if you take the signals are pragmatic. They are robust. They look at 3 aspects of the market: the price, the momentum of the price, and very, very importantly, the number of shares rising divided by the number of shares falling, which is a measure of the breadth of the advance. We want to see a JSE that's rising across the board, not a JSE that's rising in 2 or 3 shares. So that's our most conservative signal, which happened here. And as you can see, that close is above the last 10 days close. Okay, so that's my presentation. If you'd stuck to the rules, both in this market and in the US market, then I think that we had a fairly good ride over the last few weeks. We don't know what's going to happen next. Nobody knows what's going to happen next. It's our job to take the signals and to manage those positions well. Okay. Now, folks, I've been rattling on now for nearly an hour, and Sean has just told me that I must belt up and take some questions, folks. The questions are quite difficult to see on this thing. I'll let Sean navigate the questions. Don't seem to see any questions here, folks. Can I answer any questions on Vectorbased and what I've just talked about? I think that yes comes right from when we started. Okay, when we were asking about the sound. There don't seem to be any questions here, folks. The presentation will be sent out and a recording of the presentation. Any of you that would like to trial Vectorbased, I'm more than happy to give you a 60-day trial. And if you email me at traderdavy@gmail.com. Capitals on there. Where's the capital? traderdavy@gmail.com. I'll set that up for you with the greatest of pleasure. A 60-day trial of the product is $9.95, okay, which is about 100 rand these days. Okay. You can also go to the web and click on www.vectorbased.com PSG 60-day. But I think if you give me a shout or Sean a shout, we'll sort that all out for you. Okay. If there's no questions, thanks very much for coming along. And if you want to come to any of my meetings around the country, then just email me and I'll send you the directions. Be more than welcome. Sean, thanks very much, and I'll speak to you all again. Thank you. Thanks, everyone. God bless now. Bye-bye.